So we're going to do some live DCFs. So if anybody donates, I'll do a DCF on the spot. Last time I did this, it was pretty easy because there was usually one donation and I did a DCF, then another donation. But if there's multiple donations, I have to do the highest donation first, but I'll try to do everybody's. Let's see where the market's looking like today. Biomia Fusion up 33%. Usually BTCS, that's up 25%. I did a video on BTCS a couple of weeks ago, maybe a month ago. But they came down a lot because of the crypto crash. Pretty much any crypto mining or crypto wallet type company, their stock moves with crypto, even if they don't own any crypto. Like Coinbase doesn't own crypto. They store it for people, or you can buy most crypto through Coinbase or sell it. But the stock price definitely moves with the price, mostly Bitcoin, but other stuff as well. Let me know. Can you hear me? Last time they couldn't hear me. No one's commenting, so I just want to make sure you can hear me. Just let me know in the comments. I'm going to be like an idiot just talking and nobody can hear me. Somebody comment if they could hear. Okay, I'll keep talking then. Thank you, Hyperspace Holiday. Yellow. I used to be friends with this guy who drove for Yellow. Is that Yellow? I thought the ticker was YRC. Maybe this is different. Yellow Corporation. I think this might be different than a trucking company. Hey, Chris. It is the same, Yellow. I thought the ticker was YRC. Is that? Maybe that's just. Yeah, so they're a trucking company. They deliver products to different companies. He did it only in Jersey, within the state of New Jersey. But they're probably all over the world, or at least all over the United States. Yeah, I wanted to try this live DCF thing. I thought it was fun last time, and we'll see. We'll see if we get some. I have a call with someone later. One of my subscribers wants to buy a business, so I have a call with him later. So Josh, if you're here, say hi. So all you have to do is donate, and I'll do a DCF right now. It usually takes like 5 to 10 minutes to put it together, and I could show you a quick valuation and show you their ratios compared to others in the industry. Hey, Doc. Yeah, Europe, it can be hard because I'm in California, so that's 8 hours for Europe. So what, it's 7 p.m. you guys? Let's see what else went up a lot today. Upstart is up 17%. That went down a lot the other day. They had really bad earnings, right? Yeah, it dropped from like, it was in the 90s, then it dropped to. Nice. Suncor hit my target. Yeah, that worked out. Some stocks are a lot easier to predict. I mean, you can't predict. There's no guarantee with predicting the future, but certain stocks that have more stable. But for a stock that, like a penny stock or a pre-revenue stock, or a stock that has never had positive earnings, it's almost like a guess. I mean, we could do it, but it's really, it's much more of a guessing game than a valuation thing. Let's see. How's Doge? Is that still under 10 cents? Yeah, under 9 cents. That really came down. It was like 60 cents at the peak, right? When Elon went on Saturday Night Live. It only peaked at 30. I thought it went up to like 60 cents. Maybe. What's Bitcoin? Is that still under 30? Okay, it's a little over 30. Some people really got burned on Bitcoin because it was over 60. So it's back to where it was last year at this time. Actually, a little over a year ago, like 15, 16 months ago, it's back to where it was. So yeah, any donation and I'll do a DCF right now. Tellurian is up 14%. Yeah, Tellurian. I got a lot of heat when I did that stock. This is my 2-year anniversary today. My first video was May 17th, 2020. Okay, I'll show you. Yeah, I never bought crypto, and I don't think I will. See, my first video was 2 years ago, May 17th, 2020, Simon Property Group. The valuation was actually pretty good. It was pretty close. Let's see. Playboy is up 12%. Freight car. I did a video on freight car. Yeah, it got real low. It got under $1. Then it came up to 8. Then it came right back down. Okay. Jasper. Silvergate is up 12%. AMC. AMCX. Wait, AMCX? Okay. That's not AMC, it's AMCX. Applied blockchain. Coinbase is up 11% today. Yeah, because crypto's up. So when crypto goes up, when Bitcoin goes up usually, then these stocks go up. Let's see the top losers. Assure Holdings. Yeah, Walmart has a lot of negative news about they're having a hard time finding managers. They've been raising the salary and trying to get recent college grads. People don't want to work anymore ever since COVID. Blue Apron. I guess I'll just do one DCF. Anybody have an idea? Let's look at because there's no donations. Eventually there will be. AMD. NVIDIA. Roblox. SoFi. Maybe we'll do Walmart. Okay, let's get the WAC. %6.8%. Okay, let's see. Simply Wall Street's at 231. Yeah, the stock is down a lot. 630. So wait. 88. Okay, so these are the revenue targets. $31. It only takes like 5-6 minutes. How do I tell? Next, we need the net income. And revenue. Okay. Was actually really confident when. I think Berkshire Hathaway, I'm confident in. So I'm at 162, and it's trading at 131. Let's look at the ratios. I mean, I like Facebook a lot too, but it hasn't been doing well the past year. Yeah, Element is pretty risky. I think Omega is a pretty good stock. I think REIT should do pretty well with inflation and things like that. But yeah, Element, I wouldn't put too much into that. The ratios look pretty good. They have a pretty low debt to equity ratio. They pay a high dividend. Hey, Kevin, what's up? They're the biggest company. They're a lot bigger than Costco. They're bigger than Costco and Target combined. PE is a little high, but the price to free cash flow is better than average. It's better than Costco, not as good as Target. A really good price of sales. They're not growing as much, and they didn't have good earnings, right? So maybe we can maybe we should reduce their earnings a little bit. Let's knock off 20 billion in each. Still, even if we knock off 20 billion, they still seem undervalued. The thing is, once a company starts kind of, the revenue starts to decline or grow less than it was, then the stock starts coming down, even if the company's worth, even if the intrinsic value is high. Because when a company's in growth mode, like Tesla was, or lots of stocks, their stock price is way above what it's worth because people are looking towards 3, 5, 10 years down the road. They're not looking at today's dollars because a lot of companies are losing money and have a high market cap. So obviously, you're worth nothing if you're losing money. The idea is they're going to be making a lot in the future. So once a company starts showing their revenue growth start to plateau or even go down, then you start seeing Netflix and Facebook, their members started going down. Both of them, the first time ever, Facebook had a decline in the number of users and Netflix had a decline in number of subs. But if the growth gets back up to where it was for Facebook, because I think their growth was under 10%, and they usually get double-digit revenue growth numbers. So, but if it gets back up there, then the stock will shoot way up. But it could be a long time where the stock price keeps getting dragged down. But who knows? Nobody can really figure this market out, right? It's all a guessing game. Jay Powell and Jerome Powell he's live right now. I didn't even know that. What's it called? Yeah, I'm bullish Facebook too. They just have so many members. There just seems like so much opportunity to monetize so many different areas.
There are a number of plausible paths to having a soft or
moving in your direction? Because it feels like there's a chance here that inflation does come down in the second half of the year, even though it'll still be above your target.
Wait.
But there's also a chance that the labor market tightens even more. And I wonder how you would, I know it's hard to respond to a hypothetical, but that doesn't seem like a crazy hypothetical to be considering a situation where you do get improvement on inflation, but you do continue to overshoot an estimate of what might be.
You can hear me, right?
A more stable employment situation.
Well, the main thing is to get inflation down. You know, we all read, of course, everyone reads the.
I wasn't talking the past.
And looks for, you know, details that look positive.
I muted myself the past 5 minutes. I was eating my yogurt. Ed, that's why you didn't hear me.
We're gonna keep going. We're not gonna assume that we've made it until we see that, and we're not seeing that right now. There are some promising signs. You can point to them. There's some.
So you didn't even hear Jerome Powell speaking when I was away? There was totally no sound. Oh, see, this you learn something new every day. So I got to keep the thing on, and then I'll just move off screen to eat my yogurt next time.
People have suggested to me that the one thing that might slow you down, or at least make this much more difficult, would be some kind of market cataclysm. And I wonder, in part, if that's why you're trying to be more transparent, not erratic, making sudden moves on your policy moves. But my question there is, where's your level of concern that financial stability and controlling inflation by raising interest rates maybe a lot might be fundamentally incompatible in that raising rates causes financial disruption but doesn't actually bring inflation under control? Where is your level of concern around that situation?
I don't see that. So we monitor a very broad range of financial conditions, and we're doing that. We'll keep doing that. And different cycles of different times that takes place. Sometimes in numbers, sometimes in all of them. So we're watching them all, you know, as a group. And you know, of course, the volatility has been up a little bit, and that has some effect on liquidity in some markets. But nonetheless, the markets are orderly, they're functioning. I think they're processing the way we're thinking, the way that the FOMC is thinking about policy pretty well. And I think that the idea, again, is to have financial conditions tighten to the point where growth will moderate and still be positive, but moderate to the point where supply and demand can get back in alignment and where we can get inflation back down to 2%. And I see that broadly working pretty well right now. Obviously, there are some volatile days and volatile markets, but so far, I see it as I see us as getting through this fairly well.
So this is the Future of Everything Festival, and in the time we have left, I want to look ahead at some of the issues on the horizon for the economy. Labor shortage. I wonder if you see that as something that might be a more persistent, rather than just a cyclical feature in our economy. I mean, if you look at net immigration since 2017, because of policy reasons of the pandemic, it's been basically flat. Our labor shortages here to stay, and what would the implications of that be for that?
There is risk that will persist in balance between supply and demand. You can put your finger on it. It's part of its population. There's the labor force. There's the labor force participation rate. But if the population is growing more slowly, there are going to be fewer workers, and that's a big part of the story. Really, in recent years, is immigration has been quite low. These are not tools or things that the Fed has, or places where we seek to guide policy. But if you have a slower growing labor market, you're going to have a smaller economy, and you could be in a situation where these wage pressures remain longer. Of course, we'd love to see labor force participation come up, but I do think that I think that's a risk in the medium term, but it's really one for other policymakers look after.
And related to that, economists have this concept called the natural rate of unemployment. The idea that when the economy is finally balanced, there's a level of unemployment that corresponds with stable inflation. And I went back and looked. When you joined the Board of Governors almost exactly 10 years ago, the participants once a quarter project where they think these things are. So in 2012, you and most of your colleagues thought that level was between 5 and 6%. Now you and your colleagues think, writing down that it's somewhere between 3.5% and the low 4% area. But how much weight do you put on the prospect that the natural rate of unemployment, perhaps temporarily, perhaps not, has actually shifted higher, maybe closer to where you and your colleagues thought it was 10 years ago?
I think it will be right. I think there was a tremendous amount of turbulence in the labor market, and so in theory, the sort of matching function that is the labor market could be disrupted. People are changing jobs at all-time record rates, and there's just a lot going on. People are reevaluating their commitment to the labor force. So all of that points to a higher natural rate of unemployment. But the other thing that's clear though is that the effective natural rate can change pretty significantly over the course of an expansion, particularly a long expansion like the last one, where you finally had 3.5% unemployment and no sign of either wage or price inflation. You had a couple of years there where unemployment was well below 4% and you didn't see inflation. So that suggests that as that longest expansion in recorded U.S. history, 10 years and 8 months, as that went on, what you saw was matching getting better and better and better and more efficient, and the natural rate coming down. Right now, it feels like the actual unemployment rate is not a perfect. You have to think about where the natural rate is compared to today's employment rate, and it does appear to me that it's probably well above 3.6%. But it should shift down as this highly unusual time in our economy and in our labor market goes on. We should see that settling down, and we should see the natural rate declining, and that itself could reduce wage pressures and inflation pressures.
Well, all things equal, then, would you, as the chairman of the Fed, feel more comfortable today if the unemployment rate were a little bit higher, somewhere in the 4s instead of in the 3s?
I'm never going to say that more people need to be out of work. I would love to see a labor market that's more in balance, and ideally that would start with the number of vacancies coming down. And that's one of the things that is rough. Vacancies and quits are at all-time highs, and that suggests a labor market that's out of balance, and there's more demand than there are workers. So I'd love to see people come back into the labor force, and we are seeing some of that. We'd like to see that continue, and we'd like to see the job vacancies level come down so that you're seeing supply and demand get back together.
This is inflation, a chart of inflation.
Ready to shake out where it needs to be. It's as I mentioned, it's close to a 50-year low right now.
Moving from sort of the post-pandemic,
You can see inflation was so high
inventory management
in the 70s,
much more possible than it did a year ago that we're going
the Great Depression time.
businesses manage the supply chain.
I mean, when
in
the big picture, it's not that bad.
keep inflation low.
Yeah, in the past 30 years, it looks bad, but historically, it's not terrible.
Now you might want resilience. You might want to source goods from multiple suppliers, and that could embed higher costs. So what would be the implications for the Fed if we're going through some kind of regime shift where those forces that helped bring prices down over the last 3 decades are reversing now?
So I do think you've had sort of a perfect storm of disinflationary forces for the last quarter century, and that's globalization, amplified by technology. It's aging population, certainly in the Western democracies, and all of that has low productivity. That has all led to disinflation, and so some have been making the argument for years now that those forces were all going to flip. I don't think they would flip overnight, but I would say, certainly in the near term, there is a real possibility that globalization will go into reverse to some extent. And the trade-off would be those supply chains were very efficient, but they weren't very robust, and they broke down pretty badly in the pandemic. So I mean, to the extent you do that, you'd have more security in your supply chain, more stability perhaps.
This is unemployment rate.
It might be quite as efficient as the amazing global supply chain
Since the late 40s.
Very, very fast and flexible and all that. So I don't
it peaked, but now it's
overall, but you could see higher inflationary pressures.
It's much lower than
At the
average.
same time, policy could respond to that. So I don't know that you see higher inflation. So it's hard to say. Globalization obviously brought its costs and its benefits, and it benefited lots of parts of the world. And from our standpoint, we got a lot of products cheaper, but our manufacturing base in the West is vastly diminished. And you're right. It would be a very different world if we see that go into reverse or pause.
We're almost out of time. I'm going to try to sneak in one last question to you. You were confirmed last week to a new 4-year term with significant bipartisan support. Someone joked to me, you see that sort of support only to adjourn the Senate these days. You've been through a lot in your first 4 years as Fed chair, especially in the last 2. Is there anything you've learned in that time that might change your approach to this job in the next 4 years?
I think that there's an overwhelming need to get inflation under control. And that's what I'm thinking about. And that's what we're thinking about here at the Fed. In times when, you're at 2% inflation and the economy is growing and unemployment's really low, you can have a more balanced, thought about what you should be doing at work. I think we know what we need to be doing at work right now, which is to get inflation under control, and we'll use our tools to do that. That's my dominant thought about the future at the Fed. It's a great honor to be able to serve a second term, and of course I'll do my very best, to carry out our obligations under the dual mandate and leave it there.
Thank you so much for joining us this afternoon. It's an honor to have you with us. And thank you to our audience on WSJ.com and Twitter and YouTube for joining us this afternoon.
So what everybody think? I don't know. It's you hear this stuff and it's kind of, it always sounds good when these politicians explain it, but I just don't see it's like I showed you the inflation rate. Historically, it's not that bad. I just think we have to raise rates. Initially, the market will drop. There always seems to be a drop when things change, when there's a disruption. But then it just goes back to normal after a few months. But it's just been way too low, the rates, for too long. And it's easier to just keep them low while you're in office and then let the next guy deal with it. Kind of like when a new CEO comes, when a company gets rid of the old CEO and hires a new one, the new one may make decisions that are good for the short term, but not so much a long-term decision. So maybe in 10 years, the decision they make now won't be positive in 10 years, but currently it'll work and push the stock price up. So you just want to look good while you're in control, while you're running the company or running the country. You just want things to look good. It doesn't really matter so much the future. But that's why you have to sometimes look at management. Like someone like Warren Buffett's always going to think of the shareholders in the future. But there's not many people like him. Okay, so any donations for DCF? This worked out well last time. Not many people today. Let's I can't believe there's a company called Chicken Soup for the Soul. It's already come down quite a bit. So unless you're willing to time it, the problem is when market crashes, you don't have any cash because it's all in the market. And then if you sell thinking the market's going to come down, even if you do time it right, it's going to come back up, and people, when they sell and things start coming down, they don't buy back in. They wait too long, and then the market already came back up. Generally, people sell at the wrong time and buy at the wrong time. You just want to buy and hold because there's no way to. Right. The Fed is independent, but that's like saying the board of a company is independent. I mean, they are, but there's just so much influence. Like your job is. I'm trying to think. I forgot, like, trying to think of some things. Like, if you're a board member and you get paid $200,000 for being a board member of a company, you're probably going to make decisions that the CEO wants you to make because you want to continue getting your $200,000. It'll be ideally the best board is not to pay them anything, but you might not be able to get good people by not paying them anything. But yeah, it's always influenced by money. Altria, it's a good. Only thing I don't like about tobacco and cannabis stocks is, well, tobacco stocks they just generate so much cash, but they probably should have a higher market cap, but the industry they're in just it lessens the population of people who are willing to invest in that company. I mean, there's plenty of people willing to invest in tobacco, but like everybody's willing to invest in most industries. But tobacco kind of like cuts the investor pool down. Yeah, Walmart. They went down a lot. I know. I mean, I saw some articles. They were having a hard time finding management, finding people to work at the stores. And they missed estimates. So it's like it's like a knife. It's like a killer when you miss estimates. It's just, even if you have good numbers, if you miss estimates, your stock's going to go down. So the revenue was 142 billion versus 139 billion expected. So they beat revenue. Earnings were down a lot, 130 versus 148. So earnings were down a lot. So you see, they beat revenue. So top line, they beat top line, but bottom line, they missed. And that's, earnings are important because bringing in revenue is only as good as the profits you can generate from that revenue. But right, it's a tough environment, inflation, things change a lot. So I'm sure Walmart hasn't adjusted the prices in all the stores to reflect inflation. They will have to do that and pass on the expenses to the consumer. So it's probably an interim thing. It's probably a good opportunity because Walmart is just a giant of a company. It's a pretty well-run company too. It's sales growth decelerate from a peak rate during the height of the pandemic. You know, and a lot of these stocks, their revenue is not going down. You could see it's gone up higher than expected, but it's not growing at the same rate. Underlying sales trend grew. Any other comments on Walmart? Any other information? I know I saw they were having a hard time hiring people. Inventories. Walmart's earnings for the fiscal first quarter retail felt cost pressure from fuel prices, higher inventory levels, and overstaffing. Yeah, you just get squeezed. They're so reliant on like fuel, transporting the products, and there's just so much they have to purchase. It's not like a company like a tech company, like a Facebook. They don't really have to purchase anything. They have a lot of labor, but like a company like Walmart and Costco, they're so reliant on like purchasing products. I mean, that's their business, and it's just the amount of product they have to purchase is so high because their margins are like sometimes, I'm sure they have better margins than a supermarket, but they're probably pretty low, like 2-3%. Let's see. Oh boy. 1.4 in 2019. 2020 was good, 2.9. 2.5 in 2021, and 2022 is. COVID, they had good margins. You would think 2020 would have been rough, but but I guess everybody goes to Walmart because all the restaurants are closed. But this is a 12-month number. Maybe this quarter they probably had lower margins. FDX. Okay, we got our first donation. Thanks, Joe. FDX. Joe, the real deal. FedEx, 8.3. 361 for Simply Wall Street. I set up the model to make things a little quicker. $57.6. I could probably automate some of this stuff a little more. What do you guys think of the result? You think they'll be undervalued, overvalued? What do you think? What's your target? They're trading at 222. Our revenue's up a lot. Revenue's up 32% from 2019. I guess we can. If we strip out the 2020, because that negative is bringing down is dragging things down a lot. So if we stripped out that negative, if we just, because the way I calculate free cash flow is I need to see what percent of their revenue they convert to free cash flow. So so I sum up these four free cash flow numbers. And then I divide by the sum of these four revenue numbers, and that comes out to 2.1%. And I multiply 2.1% by the revenue estimates. That's how I got the free cash flow. But that's kind of an outlier because of COVID. It's probably unlikely we'll see another pandemic for a while. If we just strip out that 2020 number, we get a 269. So I would say it's undervalued, but yeah, I'd say it's closer to undervalued. Because I don't think you can leave in COVID unless we have another COVID next year, but you can't. How often do those things happen? Integrated freight and logistics. Let's look at the ratios. I wish you could get this set up where you don't have to redo it each time. If I could just make $100 a day doing these live streams, then I don't have to work, and I could just help you guys, help each other find stocks. Okay. Hey, we have good ratios. They're the second largest company in this industry. UPS is a lot bigger, triple the size. They pay a good dividend, higher than average. They're investing a ton back into the company, a lot in CapEx. I wonder why it's so much more than UPS. Maybe it was just this past year. Their ratios are better than average, better PE than UPS, not as good as a price to free cash flow. A really good price to sales of 0.6. So they generate lots of sales, but they're not as much cash flow as UPS. They're only growing at 10%, which is in line with UPS, but a lot lower than some other companies. Pretty good ROA and ROE. Look at UPS's ROE. It's that's a pretty high ROA. Yeah, their earnings are good, but their cash flow isn't, because they're really high CapEx, at least for the most recent 12-month period. Yeah, I think it's probably at the right level. I don't think there's too much upside, but let's see. So the stock does move with UPS, very similar. Up until mid 2021, then UPS just went up and this went down. I wonder why this is performing a lot worse than UPS since mid, because they were pretty much almost identical up through about April of last year. Then they just split apart. So yeah, so given this, seeing this, then maybe there's more upside to FedEx than UPS. Do you know why they fell the past 2-3 quarters? Did they have bad earnings? Let's see. FedEx earnings. They're up a lot today. So they're reporting next month. They beat revenue every quarter. They missed on earnings last quarter. So they're kind of like back and forth with earnings. Yeah, but I think it's a pretty safe investment. I mean, it's a pretty good sized company. I don't think there's too much risk. So it's trading at the same level it was in 2017. Yeah, so it's pretty. Any other donations? I could do PRPL, but if somebody donates, I have to go to theirs and put PRPL on a side. Hey Justin, what's up? We're doing purple innovation. Let's see. Do you think it's going to be over or undervalued? Undervalued, surely. Surely you can't be serious. Furnishing, fixtures, and appliances. Is the live stream blurry for anyone else? I don't think it's blurry. I haven't heard that before. You may have to change your settings or reboot. Okay. Let's see. Low margins. Okay. So this is how I did it. This is a little harder, and I probably need more than 10 minutes to look at this company. But a simplified DCF approach, it's clear as a future. Exactly. It has a high WACC. I guess it's a bit on the risky side. So these are the future revenue estimates. Like a Jeremy. What's a Jeremy stock? I never heard that before. A Jeremy stock. Does anybody ever heard that before? Did you mean penny stock? Oh, it's a SPAC. It's a SPAC. Okay. So the future revenue targets are is a YouTuber. Generally, the company provides their revenue targets. So obviously, these can vary a lot, but based on previous revenue, this definitely looks doable. And well, let's just do in order to figure out how much revenue they convert into free cash flow. It's only it's hard to look at these negatives because you can't look at it. So if I use just 2019 and 2020, they converted 5% of their revenue into free cash flow. So I use 5% for my 2025 number. And I'm just going to assume they have negative free cash flow before that. So ironically, it actually comes pretty close to the stock price. Sometimes I see the DCF come really close to stock price, which does indicate the market is somewhat efficient. This is kind of a, like there's not much nuance to this approach. I don't manipulate the numbers too much. I try to use a standard kind of model, which works with most non-financial companies. Like you can't use this model with a bank or an insurance company, but you could with most other companies, I think. Even REITs, it works. The SIE, what the hell is SIE? What does that stand for? Securities. After enrolling, FINRA provides candidates with 120 days to schedule take the SIE exam. Oh, you want to be a trader, a stock trader? Securities industry exam. There's so many acronyms. Securities investment equities. Financial advisor. Yeah, these exams are great because it gives you kind of a good foundation for all these kind of like all these things you hear in the market. It helps you kind of like understand things better. I just been doing it like on my own, just making videos and reading through things. But if you take an exam, you can kind of fast track that stuff and learn a lot of it. I never even heard of this one, but the CFA is a really good one. If you want to learn, it's brutal though. It's so difficult. It's a high pass rate, 74%. Chartered financial. Oh, CFP. Yeah, that's good. CFP. I hate studying for those exams. It's so hard to focus. I wish I could just sit and focus but it just, I don't know. Yeah, I learned much more on YouTube than I did in school. But these exams, you kind of have to learn it. You can't pass these exams and not understand it. Like you can get your bachelor's, you get your MBA and not really learn that much. Because a lot of it is kind of like, a lot of it is not focused, not just the exam. Or you learn it for the exam and then you forget it the next day. But they have so much content in all these exams. It's just an unbelievable amount of content. You have to kind of like. Yeah, Joe, no problem. Thanks for joining. If anybody wants to donate, because I do want to just do this full time, and I'm not looking to be a millionaire. I just need to make $100 a day just to cover my expenses. So maybe if I do more of these live streams. So if anybody wants to donate, and I'll do a DCF on the spot. It takes about 5-10 minutes. But you need a purpose when you look things up. Like you can't just watch a video with no reason. You're like, I want to learn more about like the balance sheet and just watch videos. you have to apply it somewhere in order for it to stick. And it could be in your own personal life, like learning about stocks, investing, but you have to apply it. You can't just watch it and not apply it somewhere. You have to actually put it to use. Maybe I should do like some type of on the live stream, or maybe in the blog and the YouTube where I mention things. Maybe I should do some things where we can like force you to learn something. Because I learn a lot from the videos, because I'm kind of forced to, if I want to explain it well, I have to learn it to a point where I could explain it to a 5-year-old. But that's why if you watch other YouTubers and you think, how come they don't explain things that well like you do? It's just, they just don't understand it. Because if you understood it, you can just explain it. But if you don't understand it, then you just kind of like, you don't talk about it much, or you just gloss over things. But after doing so many videos, I kind of got to the point where 99% of the stuff I see, I can just explain it. I don't have to like learn about it, because I know it so well, but it just takes time, right? That doesn't happen overnight. You have to learn it and try to explain it, and it probably comes out really bad. And then next time you explain it, it's kind of bad. And then the next time after that you explain it, it's decent. It's just part of the learning process, right? Did the market close? No, it's still open. Probably not much changed. Biomia Fusion. Are you familiar with the YouTube channel PPCIAN? I hate how in my finance classes they make us learn formulas. For instance, the time value of money, when there are calculators that are much better than a formula. Well, you should understand a formula rather than just punching it into a calculator. Calculators are great to speed things up, but if you don't really understand it that well, you make a mistake, which happens all the time. When I used to teach math, like a child would have like 20 times 30, and they would put like 6 million or something. Like it's obviously wrong. So if you understand things, you can spot mistakes pretty quickly. Tom, that's interesting you say that, because I was just thinking about that before. It's so annoying. It's so rare I get a response. It's so rare. Like I'd say 1 out of, I'm trying to think. I only got 1 response. I'm trying to think. I must have emailed 20 companies and I got 1 response. Which is ridiculous, because I own a company. Even if I didn't own a company, that's their job. I don't know why they. Amen, what's up? Everybody check out Dow Stock Talk. I met Eamon in like a Facebook group, like a finance Facebook group. That kind of like led into me starting the YouTube channel. I was just so bored because of COVID. I had to shut my business down. So I was so bored. So I was on all these Facebook groups, like finance, like stock market Facebook groups. And it was just a good way to just interact and just do something. And I was and I initially was explaining things to people, and some things were hard to explain. So I was making these, I did the DCF video so I could explain it, or maybe other videos. But some of the older videos I took down, they weren't like to watch. It was just really for that one person to explain how to do something. And then since I was making the video already, I was like, well, maybe I should just try to make money on YouTube making videos. And that's how it evolved to where it is today. I don't have any. The only thing I have certification, I don't have any, like, I just have a bachelor's and MBA. I did do the CFA, the level 1 CFA, but that's it. I don't have any other. I mean, I have a hard time, like, just sitting and studying. I can't focus. Like, it's just so boring. And a lot of the information in finance I could understand, but there's just so much on the test, and then the way you have to understand it, I just can't do it. It's just way too much. I wish I could. I wish I was better in school and I could just sit and read through books. I didn't have a good grades, or it was just so boring. It's so hard to focus. I needed to be like in a real world situation doing things. But that's you're not going to be successful if you get good grades in school. It can't hurt, but you have to be able to, like, kind of be flexible and, like, think of things quickly or adapt to new situations to be good in business, not just getting a good grade in school. But I've plenty of people I've worked with went to Ivy League schools, and I didn't think they were that smart. It takes a different type of thinking in order to be good at business. But I'm driven. Like, I'm like I work hard. That was my thing. Like, as you can see, I make a video every day. Same thing when I worked. I was really driven and trying to, like, absorb as much as I could. But school, it's hard to be driven in school because there's no, like, it seems pointless. Like, I'd study for 50 hours and get an A. I study for 2 hours and get an A- or B+. So I was like, what's the point? Yeah, a lot of really smart people, but they just, like, in a real world situation, they just don't get a lot of things. Like, most things are logical, like Warren Buffett says. Like, it's just any other. But yeah, subscribe to Dow Stock Talk. Help them get a few more subs. Well, last time there was that guy, Kyle, and he was donating a lot. So I guess, is there any more DCFs to? Well, Any more DCFs? Okay, let's see what. Yeah, if anybody donates, I'll just do a DCF right now. So Advanced Micro Devices is the most active. They must have had earnings yesterday, right? Was that yesterday? AMD went up a lot. I wonder why. They had earnings on the 3rd, so it wasn't yesterday. New holdings. They must have had a news story for the stock to get so much activity. 143 million shares just today alone, up 9%. Apple is up, Nvidia, SoFi, Ford. Ford came down. It was over $20. Now it's down to 13. Yeah, Twitter is going to be. Because people who bought Twitter thinking there was an arbitrage opportunity. Because when a company acquires another company, when they announce it, usually the stock price is a little less. Like if Elon announced it for $55, then and a stock was trading at 50, for example, you're guaranteed to make $5 per share or 10% when the acquisition goes through. But of course, there's a risk it doesn't go through. And that's what happened. Well, it didn't happen yet, but it looks like it might not go through. So it came down a lot. Yeah, Activision Blizzard. So that's not going to get acquired? Is that like a done? That might not pass antitrust laws. Apart from understanding rationale, the risk is a deal like a far apart. Just let the companies do business. Stop interfering. Just because they can't make more money if they want to. Citigroup is up 8%. Wow. Did they have earnings? No, they didn't have earnings. AMC is up. Palantir, $8. I don't think they're going to make it, Palantir. Oh, Warren Buffett bought Citi. That's why. Okay. Didn't he buy another thing? He got rid of Verizon. He totally got rid of his Verizon stuff. And he bought Citi. What else did he buy? He bought something else. See, why analyze stocks? Why try to understand it? Just invest in Berkshire Hathaway. He's doing all the analysis. Sold all its Verizon. How much is BRK up to 500,000 again? It's still under 500,000. It was almost 540. He bought, yeah, more Oxy, yeah. Bought Citigroup, Paramount, Markel, eliminating, yeah, Chevron. And he added Activision Blizzard. The Chevron Center. I just think Palantir, it's just a guess, but it just seems what they do is just it's hard to understand, and like when things don't make sense, I usually think that's not a good sign. And they're a SPAC too, so all SPACs. It seems like at least 9 out of 10 SPACs just crash and never go anywhere. Yeah, the revenue has gone up. It's a big market cap, 17 billion. The price sales is 9. It's a lot of trading volume, 50 million to 70 million. Okay, so it doesn't look like there's any interest in the DCF today. So I guess I'm going to close out unless anybody is interested. But okay, so I'll try to do this again. Thanks for joining, and I'll hopefully see you Saturday for the Saturday stream, 6 p.m. every Saturday. Okay, see you later.